Welcome Investorholics and friends to another ETF Spotlight review. Today we will be reviewing VGS, which is the Vanguard MSCI International Shares ETF. So Vanguard MSCI International Shares ETF is a diversified global portfolio for an extremely low cost. This ETF may interest people that are sort of buy and hold type investor, seeking long-term capital growth, some income and international diversification. And obviously you have to have a bit of a tolerance for risk, just being in the share market and everything. This is a good one, so hang around for some more information, definitely worth your while. Well, hello there Investorholics, this is Scott. KrackTheSky Value Investing will be giving you up-to-date investing news and content so you can navigate the markets wherever you are. My mission is to give you the knowledge and confidence to take control of your own personal finances, expand your investment horizons and crack your financial sky. Okay, so VGS seeks to track the returns of the MSCI World ex-Australia with net dividends reinvested in Australian dollars index before taking into account fees, expenses and tax and all the rest of it. The ETF provides exposure to many of the world's largest companies listed on major developed indexes or markets, I should say. It offers a low-cost access to a broad, diversified range of securities that allows investors to participate in a long-term growth potential of international economies outside Australia. So if you're looking for diversification, this is an interesting one. The ETF is exposed to fluctuations in values of foreign currencies, as there is not be any hedging against Australian dollar. So yeah, it's not hedged, so you're going to get the currency fluctuation. Y factor, Vanguard's investment approach provides investors with an efficient way to capture long-term market performance. Get back on track here. The fund invests in a diversified portfolio of securities, which means the fund is less exposed to the performance fluctuations of individual securities, so individual companies. So it's pretty low cost. The fund has low ongoing fees, as Vanguard strives to minimize the cost of managing and operating the fund. So they're a bit like a not-for-profit, I should say. I suppose a not-for-profit ETF provider, funds manager type setup. Okay, let's look at some more of the detail here. So you got net asset value of $77.44, trading just below that today at the close of $77.37. Market cap of 2.1 billion or thereabouts. Management cost of 0.18%, which is quite respectable. You'll have a distribution quarterly, January, April, July, October. Dividend yield is not too bad for an international focused ETF at 2.56%. So VGS could be a simple solution to achieve global diversification in your ASX share portfolio. Just buy that ETF, VGS I should say, and the job is done. You have to forget about the rest of your worries. Just keep buying the damn thing. So the ETF holds over 1,500 businesses across major developed countries, as we've mentioned, such as the US, Japan, UK, France, Switzerland, and other places. Top holdings, you're going to see some of the usual suspects: Apple, Microsoft, Amazon, Alphabet, Facebook, Johnson & Johnson, Visa, and Nestle. They're out of Switzerland. So I think this ETF could be a great way to act, or a great one to buy to act as a long-term diversified and passive type investment. Also, just thinking about the recent market crash, the current price, it looks like it actually represents some good value, and it might be an opportunity to start buying a few and building position for the long term. That's just my opinion anyway. If you're interested in doing some more research, which we always should, have a look at IWLD, IOO, and QUAL. So I've pretty much reviewed all three of those. Not too bad, those ones, but I think probably a VGS is probably a better option if you're looking for international diversification. So as we sort of mentioned, the top 10, top 15 are all sort of the usual suspects, all those big American companies. Performance since inception, you're going to get, or you've been getting 11.27%, which is above the market average. So the top 10 holdings total over 16% of the total portfolio. The ETF could serve ably as the core of the global equities allocation, just because it's low cost, low turnover, pretty tax effective, and you get that instant diversification as we sort of touched on before. Something to keep in mind though is the fact that it's sort of tilted to large cap companies or mega cap companies. So if you're going to use this, you might want to use it in conjunction with another ETF that sort of gives you some exposure to mid to sort of small cap stocks as well. So possibly if you buy VGS but just buy VAS at the same time, that gives you exposure to Australia and international companies instantaneously. So 2 trades, you can have Australia and the globe, the rest of the world taken care of. So that's not a bad option, so something to keep in mind. But as we say, always do your research. Also I think Morningstar gives us quite a high rating as well. It gets a silver rating, so it's at 4 out of 5 stars. So Morningstar like it, so it's probably not a bad place for the average person to start their research on. Are you interested in learning more about personal finance and investing in the markets? If you are, then smash the like here on the left hand side and caress the subscribe button on the right hand side. It's KrackTheSky Value Investing. We'll be giving you up-to-date investing news and content so you can navigate the markets wherever you are. Expand your investment horizon and crack your financial sky. Thanks guys. See you later.